Hello guys, in today's video I'm gonna teach you about how to prepare statement of profit or loss, or how to calculate profit or loss in case the business maintains the system on single entry system. So for the single entry system to be followed, it means what? That double aspect of transaction is not recorded here, debit is not is equals to credit here, dual concept is ignored here. So that's why we have to calculate our profits or losses from this single entry system without preparing profit and loss statement or the balance sheet. For preparing statement of profit or loss here, we follow a particular formula. What formula is that? That formula is closing capital plus drawings less further introduction of capital less opening capital, that will give you profit. But how this formula actually came? How do we need to cram it? No, actually, you don't need to cram it. Just remind in your mind about the balance sheet you used to prepare for the final accounts. In the balance sheet, what you used to do for the given capital, you used to add the net profit, deduct the drawings, and if in the question further introduction of capital is given, that was also added, right? What you used to do, the capital given, which is the opening capital, in that further introduction you used to add net profit, you used to add drawings, you need to deduct to calculate the closing balance of the capital. So here what comes is closing balance of the capital. Now for statement of profit or loss, we just reverse that formula. From the closing capital, we added drawings here, we deducted further introduction, we deducted opening capital, and what was the balance here? That was the profit. So no need to cram the formula, just remember what you used to do earlier for your final accounts, and the reciprocal of the same will become your formula here. So for this given statement, I am provided that his capital on the closing date was 1,87,000, and on the opening date, that is on 1st April, was 1,92,000. I have written the formula, I filled the value here. The closing capital in the question was 1,87,000, and the opening capital was 1,92,000, which we portrayed over here. Then he further informs that during the year he withdrew for his whole expenses is 84,200. So drawings to be added here are 84,200. He sold his investments 20,000 at 2% premium and invested the proceeds in the business. It tells about that he sold his personal investments of rupees 20,000 and brought that money into the business. So that is the further introduction of the capital. Now how to do this point of 2% premium, that we're gonna discuss now. For this 20,000 rupees, he says there was 2% premium. Premium means it was sold at a profit. So 20,000's 2% is 400 rupees. So at what price it was sold? 20,000 plus 400, that we got is 20,400. Further introduction of capital because he sold his private asset and brought the money into the business. So this is his further introduction of capital. And the balancing figure over here is profit. If it is positive, if it becomes negative, then it would be the loss. But here the question is ended, but I want to highlight one thing over here about this 2% premium. When we say that these investments were sold, there can be three cases. One is at par. If it is sold at par, that means its sale value would be rupees 20,000 as it is, it won't change, right? If it is sold at a premium as it was given in the question to us, then we took 20,000 plus 2% premium of 20,000, that was 400, then it become 20,400, right? If it would have been sold at a discount of 2%, same statement remains, only at the place of premium if discount would have been written, then 20,000 would be given a deduction for 2% discount, because at a lesser value it was sold, so the sale value would have been 19,600 here. So these are the three cases how your given securities or investments could be sold at the different valuations. At par means same value, premium plus, and discount less. One more thing I want to highlight over here, that investments could carry a name also. Like if in the question it is given that 6% government securities, the name of the investment is 6% government securities. So yeah, this 6% just tells about the interest on investment, so it need not to be accounted for your further introduction of capital. You have nothing to do with this 6% name, in the name which is given to you. If in front of that name there is a percentage written, then you won't use that percentage for the calculation of these. For these you would be given a clear cut information that at 2% premium, at 2% discount, but for the name of the securities you will not do anything relating to the conversion, right? Thank you, Accountitude. Keep scoring, like, share, and subscribe to my channel.